Hello traders, welcome to the video. In this video, I'll be showing you one of the most accurate strategy that you can use to scalp the boom and crash market. So this strategy, we are not cashing the spike to the upside or downside, we are only trading the retracement. But the way we do it, it is very accurate that you will get up to 95% win rate. So I will show you how you can easily do it, set up your chart, and how you can trade the strategy. So if you look carefully on my chart, this is the 30 minutes time frame. So in this strategy, we are using basically two time frames, 30 minutes or the 1 hour time frame where we do our analysis, and then we use the 1 minute time frame for our entry. And if you look over here, I have series of indicators. I have the Oxum oscillator, I have moving average, I have a Shimoku, and I also have relative strength index. To set up our chart, first thing we do is to click on this indicator icon over here. As said, I have 4 indicators. You can see Ishimoku, moving average, Oxum oscillator, and relative strength index. To select the Ishimoku, click on the F icon on the main chart. Ishimoku, click on that. Make this to be 9, this to be 26, this to be 52. Unfill it. So for the styles, make this to be 3 pixel and select color of your choice, and the rest make it 1 pixel and select color of your background. So if your background is white like mine, you select white, and if it is black, you select black. After that, you click on save. For the moving average, click on the F icon on the main chart again. Moving average, click on that. Make your period to be 200, shift to be 0, method to be exponential, apply to low, style 3 pixel, and select color of your choice. After that, click on save. For the Awesome oscillator, click on the F icon on the main chart, scroll down, Awesome oscillator, click on that. Make your line width to be 3. For the styles, make it color of your choice. After that, click on save. So the last indicator is relative strength index. To select that, click on the F icon on indicators Windows 1, scroll down, relative strength index, click on that. Make your period to be 1, apply to close, style 1 pixel, select color of your background. The main thing we need over here is the levels. Click on this pen icon to add level, add, type 85 and 15, style 2 pixel, and select color of your choice. After that, click on save. So if you follow my settings correctly, your chart should look exactly as what you see over here. So what are we looking for this strategy? First thing we want to do is to go to our higher time frame, which can be the 1 hour or the 30 minutes time frame. So you can see over here, I am using the 30 minutes as my higher time frame. So one thing you want to observe is anytime this red Ishimoku line is below the moving average, which is this black, we are in a downtrend. And anytime this Ishimoku red line is above the black moving average, we are in an uptrend. For the bull market, since we are catching the retracement to the downside, so we are focusing our attention more on this downtrend. So whenever we have this condition where Ishimoku is below the black line, then we drop to our 1 minute time frame and look for entry. So we can see here in the current market, we have the Ishimoku below the black line. So once you have that, let me mark out that area, and then we drop to our 1 minute time frame. So on the 1 minute time frame, you want to pay attention to this black moving average and also the Ishimoku indicator. So over here, anytime the market spikes and it enters into the black moving average, or whenever the spikes is above the black moving average, you must not enter any trade. So you can see over here, touches the black, don't have any trade around this point. So the areas you want to focus your attention to is whenever the black moving average is above the candles. So here the market is very bearish, so here we will be able to get a very nice entry. So one thing we want to do is we want to focus our attention on when this awesome oscillator enters into the 85 level, which is the overbought level. So once you have that, then we want to wait for when the candles go below the red Ishimoku under the black moving average. You should be writing out these things because this is a lot of information. So once you have that, then you wait for the first candle to close. You can see this candle closes below the red Ishimoku. You will enter a sell and count just 5 candles. So you can see that this is a lot. It is very accurate. That is the good thing. So you get less FOMO when you are trading this strategy. So you see over here, we have the Oxum oscillator above the 0 level, which is phasing up. then you will wait for when the first candle closes here. After this green bar, the one facing up, has been shown, you will enter a cell and count your 5 candles. You are not focusing on this one facing down, you only focus on this one facing up. So the reason why it is like this is because it is boom 500, because this boom 500 is harder to trade. If you go to the boom and crash 1000, you will see a very clear candles. So I use the other one so that we understand exactly what I am saying. So you can see over here, this is a very clear one. Enters into the 85 level, spike to the upside, crosses below the red Ishimoku, enter a sell, market spikes again, but did not break the black. So your mind is calm, the market is still likely to go down. So you see over here, it goes down, generates that 5 candles, then you close your trade. So this is also another one. We have a up bar, did not enter the 85 level. We have no trade. You see that it did not play out. Then we have another one that enters the 85 level after this long spike. So you wait for when there is cross below the Ishimoku, enter a sell, count your 5 candles. So let me go to the crash 1000 so that I will show you that this thing works very perfect, the boom and crash 1000 market. So first thing we want to do is to go to the 30 minutes time frame. That is the number one thing. And then we want to focus our attention. This is the crash market. So we want to focus our attention to whenever this Ishimoku and this candle is above the moving average. You can see that the Ishimoku and the candles is above the moving average. So let me take out my shape and mark out this area. 1 minute time frame. So we go to that level. So first thing we want to do is we want to pay attention to whenever the candles is also above the moving average, because here we have more buying pressure to the upside. So you can see over here, if I zoom in, the moving average is below the candles. So we have the awesome oscillator enters into the 15 level because this is the oversold level and we want to buy to the upside. So you have a touch over here and then the candle closing above the Ishimoku. You can see it at this point. Enter a buy and count your 5 candles. You can even count up to 8 candles when trading the boom and crash 1000. So you see over here, enters into the 15 level. You see that this is not as clear as the boom and crash 500 that I used as the first example. You have the cross, enter a buy and count 5 to 8 candles, and then you are out. So let me look for one more example. Enters into the 15 level, have a cross, enter a buy, count your 5 to 8 candles. You see how accurate this strategy is. After this, I want you to go back on your chart, backtest this strategy, because you can see it and see how good it is. But if you yourself did not go back on your chart to check it for yourself, then after that you can go on your demo account, trade this strategy in a live moving market. Wait patiently for when the candles is above or below the moving average, then you will look for your entry on the 1 minute time frame. So if you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.